Hi friends, I'm Mohammad Asad. Now we are discuss some basic terms in stock market. Let's move to the topic. What is stock market? Stock market is a type of exchange which allows traders to buy and sell stock as well as company to issue stock. That's a stock market. Then a stock represents the equity of the company, whereas are the pieces of a company. The stock market mainly serves two purposes. First, to provide capital to companies so that they can use this fund for expanding their business. Then second one, stock market serve is to give the investors an opportunity to share in the profit of companies which are listed in the stock exchange. These are the two purposes. First one, this fund for expanding their business. Then market serve is to give the investors an opportunity to share in the profit of the company. Now we are discuss basic terms in stock market like stock, share, buy, ask, bid, spread, authorized share, IPO, secondary offering, dividend, broker, exchange. Then portfolio, margin, stock symbol, bull, bear, volatility, going long, averaging down, capitalization, float, index, liquidity, and trading volume. Let's move. First one, stock. Stock is a general term used to refer to a certificate indicating ownership in a company as a stock. Then a share is an indivisible unit of capital expressing the ownership relationship between the company and the shareholder. It's an expressing ownership relationship between the company and the shareholder. Next, buy. Buy means to buy shares or take a position in a company. So just represent buy. Then sell. Getting rid of the share as you have achieved your goal or want to cut down losses. Let's sell. We sell our shares in stock exchange. Then ask. Ask is what people who are looking to sell their stock are looking to get for their share. Let's ask. Then bid. Bid is what you are willing to pay for a stock. Yeah, investor, what are willing to pay for a stock. Then ask bid spread. Spread is the difference between what people want to spend and what people want to get. Next one, authorized share. This is the total number of shares that a company can trade. So authorized share. Then IPO, initial public offering. That means that happen when the private company becomes a publicly traded company. It's the first time a company offers a share for trading on a stock exchange. Typically, you buy share from the previous owner and not company directly. In the case IPO, initial public offering, you can buy shares from company directly. And you get share from the company directly. That's an IPO, initial public offering. Then secondary offering. This is another offering in order to sell more stock has to raise more money from the public. It's a secondary offering. It's through the stock exchange, the secondary market. Then dividend. Position of the company's earnings. Sorry, portion of the company's earnings which is paid to the shareholders. And shareholders get a portion of the earnings of the company. That's a dividend. Then broker. A broker is a person who buy or sell stock on your behalf. A broker is a person. We can buy shares through these broker quickly from the stock exchange. Then exchange. An exchange is a place where different type of investment are traded. That's an exchange. Here different type of investment are traded. Buy and sell is an exchange. Then portfolio. A collection of investments owned by you. That means a portfolio is a collection of financial investments like stock, bonds, commodities, cash and equivalents, like that. We can invest money. We can invest money in one or more companies, and we can buy shares from the one or more companies. That's a portfolio. Then margin account lets a person to borrow money from the broker to buy a share. That's a margin. Then stock symbol. A 1 to 3 character alphabet root symbol which represent a company listed on the stock exchange. That's a stock symbol. Then bull market. A bull market is a market condition where investors are expecting price to rise. That's bull market. Just to opposite is a bear market. Bear market is a market condition where investors are expecting price to fall. That's the difference between bull market and bear market. Then volatility. It means how fast a stock moves up or down. It's a movement of stock up or down. It's a volatility. Then going long. Betting on the stock price will increase so that you can buy low and sell high. That's a going long. Next one, averaging down. This is when an investor buys as the stock goes down so as to increase the price at which purchased. Then capitalization. This is what the market thinks a company's value is. That's simply capitalization. What the market thinks a company's value is. Then float. This is the number of shares which can be actually traded after deducting the share held by insiders. That's a float. Then index. A benchmark that is used by investors and portfolio managers to measure market performance. Measure market performance or condition. We can see in the index the present condition or present performance of the market. The Nifty and Sensex are the such benchmarks. Then liquidity. We know liquidity refers to how easily a stock can be sold off, or a share that can be sold off quickly. We know easily convert into cash, a stock or anything. Then there's a liquidity. Then trading volume. The number of shares being traded on a given day is called trading volume. Okay, the number of shares being traded on a given day is called trading volume. Okay, I hope you listen very well and understand. Just read it and listen. That's it. Thank you. Thank you, all of you.